Ladies and gentlemen, and thank you for remaining with us. You're watching Smart 24, and in particular, you're watching Financial Markets. My name is Anthony, your host for the program. Now, let's cross over to the Nairobi Stock Exchange. Our very big partners there in Nairobi, Kenya. Now, the Nairobi Stock Exchange is the biggest stock exchange in East Africa. Of course, followed by Tanzania. Then we have now the Uganda Securities Exchange. We also have the Rwanda Stock Exchange. But in particular, the Nairobi Stock Exchange indicates a lot about East Africa because most of the companies listed in all these other exchanges are cross-listed from this particular exchange. Looking at Uganda, we have over 8 of them from just this exchange. Out of these 65, 8 of these are cross-listed on our own exchange here. Looking into their performance, last Friday, we see that in aggregate, only 45 stocks participated in trading. And we see that we ended the day with 11 gainers and 25 losers on the stock market. The top gainers, the 11 top gainers were led by Olympia Capital Holdings, and he gained by 8% share price appreciation, closing at 2.7 Kenyan shillings. And we also had Ever Ready East Africa, who gained by 4%, and Nairobi Business Ventures at 3.78% gain. We also had CIC Insurance Group at 2.97%. On the losing side, we had Stanbic Holdings, who came out last with an end-of-day price depreciation of 10%. That is to close the market at 90 Kenyan shillings. And he was followed by Standard Group at 9.92% decline. Then we had BK Group at 8.47% decline. And Jubilee Holdings at 4.33% decline. Now, this is Jubilee Holdings Kenya. We have Jubilee Holdings Uganda and then Jubilee Holdings Kenya. So Jubilee Holdings on the Nairobi Stock Exchange was actually a loser, while here in Uganda, he was a gainer. NCBA Group came out with the highest volumes traded of over 4.19 million shares. He was followed by KCB Group at 4.05 million shares, and Kenya Power and Lighting Company, who came out at 3.63 million shares. And Safaricom came out at 2.58 million shares. Regarding the performance of the Nairobi Stock Exchange market indices, the benchmark index, that is the Nairobi Stock Exchange All Share Index, declined 2.25 points. That is 1.56% drop in points to close the market at around 142 points, 142.33 points. It represents a 6.18% gain in a week, and a 4-week gain also of 14.8%, but an overall year-to-date decline of 14.56%. Now, other remarkable indices, we had the NSE 20 and the NSE 25 as well, who performed on the market. And looking into this exchange, definitely it has 4 main market listings. We have first of all, the main stream, that is the main investment market segment. We have the alternate market segment. We also have the fixed income securities market segment and the growth enterprises market segment. And these 4, definitely the 3 of these 4, 3 of them are, of course, for medium and large-sized companies. And then the other one is for the growth enterprise, is for the growth enterprises, that is the small-scale businesses. And it was initiated in 2013. And the Nairobi Securities Exchange, some unique feature about it, it's a demutualized exchange, which demutualized in the year 2014 after its initial public offer. When it went public and actually decided to trade half or some of its shares to raise about 627 million Kenyan shillings in terms of capital. And it did so in 2014 and now is listed on the main board of the exchange, of its own exchange, the Nairobi Securities Exchange. So it's one of the players. So you being an exchange and then you list on your own exchange, it's kind of like being a leader with example. You give people direction, you give people motivation, you give people the way forward. You make sure people are just doing exactly what you're doing, and that's what exactly the Nairobi Stock Exchange did. By getting listed on the stock exchange, it was one of the things they did to make sure they are definitely recognized, and also they become a separate entity or business for profit rather than just a government organization. That is it from the trading day. Now looking maybe at the performance of this exchange in terms of indices, like I said, the all share index went down by 3.74%. That is to 138.59 points. In terms of year-to-date performance, we have seen a loss of 16.74%, and the market capitalization currently stands at 2.22 trillion Kenyan shillings. In terms of the summary of the trading day, that day ended with a total of over 17,029,900 total shares that were done in 1,483 deals, corresponding to a market value of 398,489,712 Kenyan shillings. Compared with the previous USE trading day, we see a 27% improvement in volume, a 29% improvement in turnover, and a 35% improvement in deals. And that was the Nairobi Stock Exchange for you there, giving us a little bit of performance indicated in terms of the people that actually were able to trade, and in terms of volumes that improved as well on that daily basis. Now let's move away from the exchanges into some of our top stories. Our top story this very afternoon is URA that has, of course, closes the year 2021-2022 without some money, of course, with financing of about 704 billion shortfall that we are seeing on the market. Now, the Uganda Revenue Authority has closed the year 2021-2022 with a shortfall of 704 billion Ugandan shillings. The Uganda Revenue Authority, of course, in the financial year 2021-2022, collected 21.6 trillion, a growth of 12.44%. However, this was below the target by 704 billion in a year where URA deployed technology such as electronic fiscal receipting and invoicing systems, and as well as digital tax stamp to meet a collection target of 22.3 trillion. The two tools, that is the electronic fiscal receipting and invoicing system, as well as the data tax stamp, DTS, to a large extent supported URA to minimize revenue leakages that most companies have been exploiting to evade taxes. According to URA tax performance report, URA collected slightly more than 21.6 trillion against a target of 22.3 trillion. Mr. John Musinguzi, who is the URA Commissioner General, said during the period revenue collections had grown by 12%, indicating a nominal growth of 2.3 trillion Ugandan shillings compared to 2020-2021 financial year. However, the outturn for the year saw a net revenue collection of 21.6 trillion, short by 704 billion against a target of 22.3 trillion, he said. During that period, URA noted improved areas management, expansion of tax register, to more than 2.5 million taxpayers, enhanced countrywide customs and domestic taxes enforcement initiatives, and leveraging alternative dispute resolution and strengthening tax investigation initiatives contributed to suppression of more than 2.5 trillion anticipated revenue loss to just 704 billion. However, Uganda Revenue Authority indicated an outstanding tax liability of 400 billion Ugandan shillings due to government remained uncollected during the period. During the period, domestic taxes collections stood at 13.6 trillion against a target of 14.6 trillion, registering a deficit of 997.48 billion and a performance rate of 93%. However, customs collections stood at 8.4 trillion against a target of 8.1 trillion, posting a surplus of 294 billion shillings, a performance of 103%. URA also indicated that going forward, focus will be put on consolidating and refining gains scored with adoption of the key technologies, that is the electronic fiscal and transfer initiative, as well as the DTS and the rental management systems, as well as the enhancing the cargo tracking system and the non-intrusive inspection technologies and full integration of URA central IT systems for effective trade facilitation and transparency. Yeah, those are reports coming in from the URA, Uganda Revenue Authority, who are the official tax collectors in Uganda. Not the tax collectors in the Bible, but at least these are trying to do their best to see that they collect as much money as they can get. But still, in the year 2022, we see that they fell short of about 704 billion, which is not that bad compared to what we have seen in the past. And given these policies, they are bringing on board the technology policies. We hope they will do better, and also the rental management systems and so on that are coming on board. We hope they will do better at their job. Another top story we are looking into today, we see that the banks are seeking to finance manufacturing. Now, Uganda Bankers Association has said the banking sector is seeking to enhance funding to key sectors of the economy, among which include manufacturing, tourism, and hospitality and agribusiness. The focus of the above sector, which will be key discussion points during the annual Bankers Conference, are part of the plan to narrow the financing gaps constraining growth. Speaking during a news briefing ahead of the two-day annual Bankers Association conference, and which is expected to be between 25th and 26th of July, Ms. Sarah Arapta, who is the Uganda Bankers Association's chairperson, said funding critical sectors of the economy was important to boost economic activity, economic recovery. Ms. Arapta, who is also the City Bank Managing Director, noted that the bank had taken a prudent step to increase the central bank rate from 7.5 to 8.5%. This, she said, seeks to control inflationary pressures and volatility in the foreign exchange market, which in most cases tend to affect the banking sector, as well as dampening investment activities. When the inflation and volatility in the foreign exchange market depreciation is high, it affects banks and investors. That is why the central bank is right to increase the central bank rate until inflation stabilizes. In 2 consecutive months, the central bank has been increasing the central bank rate by a percentage point, and first from 6.5% to 7.5% in June, and then 8.5% in July. However, Ms. Arapta said that whereas a high central bank rate slows down the growth in the private sector credit, risk of loan defaults, and leads to surge in interest rate. Banks must scale down capital expenditure and pay a lot of attention to risk management. Mr. Wilbrod Owor, who is the Uganda Bankers Association Executive Director, said because manufacturing, tourism, and agribusiness have multiplier effects on the economy, it was important that the banking sector focuses on the three sectors to achieve real economic growth. He also said that the economy needs recovery from low growth. Manufacturing and tourism and agribusiness have multiplier effects, informing job creation and employment plus foreign exchange earnings. These sectors need financing and need to be supported by banks providing necessary funds that they need to run their businesses. According to Mr. Whereas manufacturing and tourism are among some of the biggest recipients of credit, there's need to enhance them to achieve real growth. For instance, he said loans to manufacturing grew to 2.4 trillion Ugandan shillings as of May, while advances to tourism grew up to 435 billion Ugandan shillings. That is it from the banking sector, looking into investing further in tourism and other sectors like manufacturing, so as to be able to have recovery of these businesses, because they're quite important to the growth of the economy. Thank you very much for remaining with us. We are really, really grateful. Thank you for watching Smart 24. You can keep around. Lots of more shows are coming up, and that is UG Tukole by Fred Makuya and a couple of others as well, Skill Up and Jane Cholera and so on. And I hope you have yourselves a wonderful rest of the day. We'll catch you tomorrow, same time, same place. See you around.